Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 24th, 2025, and we're diving into Union Pacific's latest earnings report for the first quarter of 2025. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Union Pacific has just released their Q1 2025 results, and there's a lot to unpack, from their operating income to their strategic outlook for the rest of the year.
Revenue and profitability overview. Let's start with the top line. Union Pacific reported operating revenue of $6.0 billion, which is flat compared to last year. However, their net income stands at $1.6 billion. John, can you elaborate on these figures?
Absolutely. The operating revenue remained steady at $6 billion, despite a 7% increase in volume. This was offset by a challenging business mix and reduced fuel surcharge revenue. The net income of $1.6 billion reflects a stable performance, with an adjusted EPS of 270 cents, slightly below the forecast of 273 from 9 analysts.
And what about their freight revenue?
Freight revenue grew by 1%, with a notable 4% increase when excluding fuel surcharges. This indicates strong core pricing gains, which helped offset some of the headwinds they faced.
Operational efficiencies and future outlook. Union Pacific has also reported improvements in operational metrics. Can you tell us more about their operational efficiencies?
Union Pacific's operating ratio remained flat at 60.7%, which is quite impressive given the external pressures. They've achieved record freight car velocity at 215 miles per day and improved workforce productivity by 9% to 1,091 car miles per employee. Additionally, their fuel consumption rate improved by 1%, showcasing their commitment to operational excellence.
How does this position them for the rest of 2025?
They're affirming their 2025 outlook, focusing on safety, service, and operational excellence. Despite a mixed economic backdrop, they aim for earnings per share growth consistent with their long-term targets, supported by a robust capital plan and share repurchase program.
Market reaction and strategic initiatives. John, how has the market reacted to Union Pacific's earnings report, and what strategic initiatives are they focusing on?
The market's reaction has been relatively stable, given the flat earnings and revenue. Union Pacific is focusing on strategic initiatives like a $3.4 billion capital plan and share repurchases between $4 to $4.5 billion. CEO Jim Vena emphasized their strong start to the year and their positioning to deliver on their strategy.
What are their key growth targets?
They're targeting high single to low double-digit EPS growth, maintaining an industry-leading operating ratio and a strong return on invested capital. These initiatives are crucial for sustaining their competitive edge in the market.
Key takeaways. In summary, Union Pacific has delivered a stable performance in Q1 2025, with operating revenue at $6.0 billion and an adjusted EPS of 270. Despite missing the EPS forecast slightly, their operational efficiencies and strategic initiatives position them well for the future. Thank you for joining us, John.
Thank you. It's been a pleasure discussing Union Pacific's performance.
Thank you to our viewers for watching. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Union Pacific's performance in the comments below. Until next time.